Mahindra Holiday declared their numbers. They had their press conference. The management is now joining us on the sidelines of that conference. Mr. Singh, MD and CEO at Mahindra Holidays and Resorts, is with us. Thank you so much, sir, for taking out time for us. Can you just first start with, there was a lower occupancy income from natural calamity like Kerala and Coorg. How did that impact your Q2 numbers?
In this particular quarter, there are two things that you need to understand. One, of course, is the Kerala and Coorg, which affected our resort incomes, and I will talk about that also. But more important for everyone to understand is that we are in a new accounting standard. In that, what happens is that the first earlier years, last quarter, if you were to see, we could account 60% of the income upfront on the membership fees. Now we are, as per the new accounting standard, accounting only 4% of the income in the first year, and the balance 96% gets accounted over the 25-year period. So what it has done is, it has reduced our income, and as a result of which you have seen the reduction in the profit. So the reduction in the profit is not only due to Kerala and Coorg resorts, but is also due to the accounting standard. And if I were to talk about the Kerala and Coorg resorts, there was an income reduction as a result of the Kerala and Coorg resorts by about 7-8%, and that is largely because of the fact that we have 30% of our inventory in Kerala and Coorg. We have about 6-7 resorts in Kerala and about 2 in Coorg. So they got definitely impacted during this quarter. And the good news is that towards the end of September, we started to see the occupancies, and October, November, December, their occupancies are beginning to pick up.
What has been the member addition in this quarter? What's the target going ahead?
So we have clocked in about 8,700 odd member additions. Last year we had clocked in about 7,700 around the same time. So this is a 13% growth, fairly healthy growth. So we see member additions going forward in line with what we typically do in Q3, Q4. And if you recall, last year we did about 18,000 odd. So I do see the momentum in the member additions, which we are trying to drive. But parallelly, most important thing is we are going to now see much higher occupancies in the quarter 3 compared to quarter 2. As you know, in quarter 2 our occupancy got hit because of this Kerala and Coorg. From 81 it went down to 76. Q3 is typically a good quarter, and we are seeing bookings. As you know, we open bookings 4 months in advance for our members, so we are seeing fairly healthy occupancies looking forward into Q3 and hopefully eventually into Q4 as well, in line with our past trends. And the other part is that we also added in this quarter 3 more resorts, Darjeeling, Kalimpong and Namchi, and they have taken our resort count from 55 to 58. Our room count now stands at 3520. It's a very small inventory addition, but it just gets us the destination, and we have a leg in the destination. And most interesting piece is that we now have a presence in Orlando in US. We have 3 resorts with whom we have tied up, and our Club Mahindra members can go and holiday in Orlando and as well as enjoy the Disney World over there. So these are some new interesting developments that happened this quarter, despite the Kerala and Coorg sequential growth in the profit after tax of 5%.
Hi, Mr. Singh. This is Nantara from New Delhi. Okay, so what is done is done. Let's talk about the road ahead. I'm sure that's what your shareholders will also want to know about. Next results will be with India's busiest time for tourism. That's the third quarter. Of course, Q4 is also pretty good. So what's your outlook as far as margins go? Forget sustainable, will you be able to grow them?
So we are now on profit after tax margins obviously are lower compared to what they were in the previous quarter, and to that extent not comparable. But we do internally look at the margins, and they definitely are improving. I would say that the margins are sustained over the last 3-4 years if you were to look at our margin profile of profit before tax. And that is something that is available on the investor presentation that we have uploaded on our website. So I would say that on the margins there is always room for improvement, and there is a significant movement that we've done over the last 3 years from somewhere around PBT margins of about 16% to 19% for this H1, which if we were to compare it as per the old accounting standard. And the other good news which I want to share with you is that if you look at a trend, the cash on hand, which used to be just about 20-25 crores, now is sitting at a very healthy 484 crores. So we have cash available for us to do acquisitions or, build, buy resorts without taking any recourse to debt. So our balance sheet is at its strongest ever, as we have seen in the recent past.
Okay, so as we come to an end of this interview, again, I'm going to ask you one forward-looking statement, Mr. Singh. Tell us, what is the cash on books, and will you be using that for expansion plans? What is it that your shareholders can look forward to? What are your growth plans?
So, as you know that we have expansion plans of about 500 units that would come in Goa. We have a very healthy capital expenditure plan in Goa, which is about 240 room resort which is getting built, and then we have also another 50 rooms which are going to come in Kerala, Ashtamudi. So these are the two capex projects which are running, and there are some permissions that are awaited in Himachal where we have a resort in Kandaghat where we are planning to do expansion, and that would be another 140 crores. So we are having a total capital expenditure plan of 500 crores which is on track.
Thanks so much, sir, for telling us what do you make of the results, what's the way ahead, and saying about the margins and how they have done an improvement.